Hello and welcome to our update on the US inventory data for US crude oil stocks. So crude oil stocks rose while gasoline and distillate inventories fell last week, according to the Energy Information Administration. Now, crude oil inventories were up 13.8 million barrels in the week to March 5th. It's up to nearly 500 million barrels compared with expectations for a much smaller rise, so only $800,000 rise. I'm on the Refinitiv platform here. You will be using, of course, your own proprietary platform, but this is where I get my news from to make it a bit easier to deliver. Crude oil stocks at Cushing rose by 500,000 barrels. Refinery crude runs rose by 2.4 million barrels per day. Refinery utilization rates rose by 13 percentage points in the week, and US gasoline stocks fell by 11.9 million barrels in the week to 231.6 million barrels. So, distillate stockpiles, which include diesel and heating oil, fell by 5.5 million barrels versus expectations for a decline of 3.5 million barrels. Net US crude imports fell last week to 919,000 barrels per day, according to the EIA. Remember, the American Petroleum Institute had on Tuesday suggested that the market would see a rise of 13 million barrels for the week to the end of March. Data also reportedly showed gasoline stockpiles down 8.5 million barrels. So it seems to be sort of in line. I think crude oil futures we're seeing have risen after the report. If we look at crude futures here, crude oil trade for April trading at $64.50 on that one. If we can look at our pricing here, we'll be able to get to the latest here on crude oil. I think it will be easier if we just go straight to the WTI futures. There we go, NYMEX light crude. See here coming in at 64 there, 64.30 for that contract, the CLC1. That's expiring in 12 days time. So you can see there where that one's looking. That's currently trading, as I say, at just above $64. If we look at the futures curve, you can see how that is pretty well backward dated. Here we go on to the futures. So still looking pretty backward dated on that one, down sort of $3 out till October, and then $4 out till January. So that backwardation still hints at a pretty tight market. Of course, the situation in the US with inventories and gasoline inventories versus distillates and so on is all very confused by the situation with the Texas freeze and what that has done to the market. Let's look at the headline here from Reuters. Refinitiv, US crude futures extending gains at 1% after that bigger than expected storage build. So again, bigger than expected build, but price is higher nonetheless, just because the market's all out of whack really with the movement in Texas and the weather and so on, as I've said. So that's where we're at today. Trades at 64.31 there on the crude oil futures on WTI. We might want to also look at Brent futures for you. Can bring that one up. ICE Europe Brent, here we go. Again, we see that backwardation in the curve in the futures contract, 68 nearly, down to 62 by February next year. Trades up at 67.81, up 0.5% on the day there. So a bit coming through for crude oil after those inventory numbers. We will, of course, need to pay close attention to what's been going on in the Middle East with Saudi Arabia, and of course we've had Alexander Novak today coming across the wires. He's been talking that he's been saying today that there is a deficit in the global oil market. So his current situation in the oil market is more stable. Demand is restoring gradually, and oil demand seen at pre-crisis levels in 2022. Novak also said that global oil stockpiles to decline to a 5-year average this year. Says there is a risk of oil production increase at non-OPEC plus countries thanks to higher oil prices. And he says the oil deficit is at around 1 to 2 million barrels per day. So bit coming back through for oil futures this afternoon after those EIA inventory numbers. Again, big rise in stockpiles, but the draw on gasoline stocks and others is supporting prices. That's it from me for the time being. We'll be back later.